back, traders. This is our gold weekly review. My name is Angelo Zitis, and we start with our title for this week: The Precious Metal Reflects the Rising Risks. Our first point is regarding the IMF, which downgraded global economic growth. Yesterday, the IMF released its July report, which basically explained the current state of the global economy. Initially, the IMF downgraded global economic growth by minus 0.1% for both 2019 and 2020. For 2019, it's now down to 3.2%, and for 2020, it's down to 3.5%. Even though the fund made it clear that the world is far from a recession at the moment, it emphasized the fact that global risks have increased significantly, which is holding growth down and is holding growth limited. The IMF studies economies and geopolitical circumstances from all around the world, and due to its broad view, it can estimate and provide accurate analytics. The IMF bases its opinion on facts, and so its views are generally taken very seriously by governments and financial markets. In any case, gold price movement during June and July very accurately reflects what the IMF noted in its statement yesterday. Matters like the uncertainty from the US-Sino trade war, the ongoing Brexit uncertainty, weakening economic performance from Europe, tensions in the Middle East, and even geopolitical matters leading to refugees are all keeping economic expansion and activity short. All these issues harm investment confidence and trade supply chains, but also spread fear. Now, gold traders, on the other hand, are glad to use this information to make profits. Gold prices absorb all the market reaction coming from the increased risks and have managed to ascend the precious metal, breaking it out of levels it had been moving between since 2016. That's 3 years back. Our next matter is the US dollar strengthens. Now, the US dollar has been in an upward run during its latest sessions, with analysts citing the US-Sino talks as a bullish signal for the greenback. Even though we are seeing small actions of progress from both sides, the talks have a lot of uncertainty following them due to the high expectations the US has on the outcome. And on the other hand, we have the Chinese requesting balance between them in order to sign a deal. Now, as long as the market receives messages that the trade tensions between the largest economies persist, we could be seeing gold prices maintaining their support, maintaining their current levels. Next week, US officials are heading to Beijing for new talks, so even more is coming up. However, knowing US President Donald Trump unpredictability, we would not lock in any expectation until the deal is signed. Our third point is upcoming meetings create interest. Now, the precious metal could also be significantly sensitive to tomorrow's ECB interest rate decision and accompanying press conference with Mario Draghi. Traders will be interested in making a gain on market reaction. A lot of analysts believe that the outcome could be dovish for tomorrow's ECB interest rate decision. Then we move to next week's FOMC meeting. The FOMC is likely to cut rates next week. The most natural response to the matter is that interest rates may be a source of energy for the safe haven instruments, especially for gold prices. We move now to the 4-hour gold chart. Gold is currently trading very close to our R1 1425 level. It seems to have the energy to climb even higher for our R2 1435 level, and even higher, the most possible stop could be the R3 1450 level, which was reached once in July in the previous weeks. If gold is to move lower, we could see breaking below the S1 1414 level and heading towards the S2 1400 level. If this level is broken to the downside, that means a lot of buying positions could be removed. We could see even more selling persisting, so we could reach the S3 1382 level. Unfortunately, the RSI indicator is right between the 70 and 30 level, not providing the necessary information for traders to get a hunch as to where the market could be heading. Now, if you've heard something in this report that you found useful, make sure you apply it to your trading. That's the reason this report is for. From everyone here, thank you very much. We'll see you next week. Solid trading.